Welcome to Creamer Media's Resources Watch, the weekly video roundup of the events and people making and shaping the news in the mining industry. This week, the hydrogen economy could happen, and Master Drilling remains focused on regional growth strategy. Hydrogen energy has been like science fiction since the post-World War II period. Many have dreamed about being able to replace oil and natural gas with hydrogen, but limiting factors have been the cost of production and safety issues.
Well, hydrogen energy has been like science fiction since after World War II. People have dreamed of being able to replace oil and natural gas with hydrogen, but the technology's not been there. I mean, there's three big limitations. One is the cost of producing hydrogen, which has changed radically in the last 5 years with the rise of off-peak solar, nuclear, and wind power generation, as well as hydroelectric power generation capacity. But the real limitations have been the safety issues of shipping, storing, and distributing hydrogen, and the costs because of those safety issues. And with the rise of liquid organic hydrogen carriers, and Amplats is doing some work with Hydrogenious, we're working with a company in the United States, in China and in South Africa. So with the rise of advancements in liquid organic hydrogen carriers, that radically changes the safety issues of shipping, storing, and distributing hydrogen, and therefore the costs. And all of a sudden, it's competitive with gasoline or petrol at $4 a gallon, or $1 a liter. So now all of a sudden you can say, okay, this is good, and you also avoid all of the infrastructure. So hydrogen energy all of a sudden looks better.
JSE-listed drilling solutions company Master Drilling's acquisition of Atlantis Group helped to boost its revenue and regional operations in the 6 months ended June 30.
I think our knowledge of the impact of what's going to happen with the commodities, given this so-called trade war, we're not in a position to guess, or we're not in a position to deal with that in the business today. I think there's too many moving parts, and what we've agreed to do is probably more focus on the opportunities that might come from this trade war and the result and or the impact thereof on commodities. So that's one. That said, though, we do believe that with gold, especially if you deal with the clients which is in the lower end of the cost curve, the silver clients, and I'd like to think short-term, maybe even nickel. I think there's some runway left for those guys. Iron ore, we're not in a position to comment on that, but I do believe if we're close to those commodities, and maybe copper in the short, medium term, we should be okay.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.